Welcome everyone. Welcome to the Alpha Alternative 7th anniversary series of webinars. This is the second webinar we have hosted after our equities webinar. My name is Prashant Kothari. I am a partner at Alpha Alternatives. Alpha Alternatives is a multi-asset class, multi-strategy asset management platform based out of India and Singapore. We create sophisticated investment solutions for our clients with a deep focus on alpha generation. We operate across commodities, equities, structured credit, and quant strategies. Before we start, please note that this webinar is solely for discussion purpose only, and it does not constitute any advice, solicitation, or invitation to invest in any cryptocurrencies or otherwise by Alpha Alternatives or any of the panelists who are joining us from different parts of the world today, from New York, Singapore, and India. Let me start by introducing the moderator for the session today, Ashim Sahni, who heads the quant strategies desk at Alpha Alternatives. Ashim is an alumni of IIT Delhi and ESCP Paris. I will hand over to Ashim to introduce the panelists and to take you through a very interesting discussion on a space that we are all eager to know more about, cryptocurrencies. Ashim, over to you.
Thanks a lot, Rako. Welcome everyone on board. We bring to you a very interesting panel discussion today on a fairly exciting topic, everything you need to know about cryptocurrencies. Now, whether you're a complete starter to the world of cryptocurrencies, Bitcoins, or an expert, I hope that today's session should be illuminating to everyone in the audience. I'm pleased to present to you a very distinguished panel for this discussion, based out of India, Singapore, and New York. One is a founder of a cryptocurrency exchange. One is an asset manager focused on the cryptocurrency space. And one is an author of a book on blockchain, the technology underlying cryptocurrencies. So first up, I'll introduce Sandeep, Sandeep Goenka. Sandeep has been at the forefront of Bitcoin and crypto investing in India, both as an investor and as a founder. He co-founded Zeppay in 2015 along with two others and built it into one of India's largest cryptocurrency exchanges. He sold his stake earlier this year and he still retains a board seat. He's based out of Singapore and is a professional investor in the cryptocurrency space. Sandeep is passionate about helping people understand Bitcoin, and he makes various educational videos on his website, www.sunnybitcoin.com, and he also runs a YouTube channel by the same name. He also provides Bitcoin consulting services to HNIs and institutional investors. Second up, I'll introduce Albin. Ian has spent 20 years on Wall Street, most of them at Deutsche Bank, covering emerging markets, fixed income. Very recently, he's shifted his focus to what he calls as the next emerging market, which is the world of cryptocurrencies. Ian is a director of sales at Grayscale Investments, which is the largest digital currencies focused asset manager based out of New York with $6 billion in assets under management. Grayscale provides investors with a simple way of investing into digital currencies by investing into their ETFs or exchange traded funds and bypass the whole challenge of buying and storing and saving these cryptocurrencies on their own. Very much like a simple investment product like a mutual fund. Ian works with large investment managers and institutional investors and educates them about this asset class and how they can invest into it. Our third panelist is Kunal Nandwani. Kunal spent a large part of his earlier career in investment banking with Lehman, Nomura, and BNP Paribas in London. Later, he moved back to India and he effectively became a serial entrepreneur. He's the founder and CEO of U-Trade Solutions, a firm that builds algorithmic trading softwares. At some point, he also got excited by the whole cryptocurrency and blockchain technology that underpins them and went down the rabbit hole of understanding and researching about it. He has published a book on blockchains known as Squaring the Blockchain Circle. And he also founded two more startups focused on this space, a blockchain solutions firm, HashCurve, and a decentralized digital identity platform, Cove Identity. Thank you all for joining us on this webinar. So we are going to follow a three-section agenda for today. First, we'll touch up a little bit upon Bitcoin 101, just generally talk about the concept and introduce the asset class itself. Secondly, we'll touch up upon how you can view Bitcoin as an asset class. And thirdly, we'll discuss how should you look at investing in Bitcoin and what are the challenges and the various approaches that you can gain exposure to this class. All right, let's start off with the first discussion on Bitcoin 101. So let me put it up in a very simple and blunt way. What the heck is a Bitcoin or a cryptocurrency? What is this concept all about? Sandeep, do you want to start out about it?
Yeah, sure. It's difficult to grasp Bitcoin because there are no easy analogies. And another thing is that it is many things, just not one thing. So according to me, Bitcoin is really three things. The first is that it's a peer-to-peer network of money. So it's a payment network, just like the internet is a network of information. That's one thing. The second thing is that it is a potential instrument, to save your purchasing power, or potentially as an investment. So it has a digital asset which is scarce. This is the first time in the world which a digital thing is scarce, which is used to use this peer-to-peer network. So that's the second thing. And the third thing is that it's a record, it's a ledger, which is also called a blockchain, where once a transaction is recorded on it, that transaction remains there forever. So that can be used for various other applications where trust can be kind of decentralized from a centralized party to this network. So according to me, it's three things.
Ian, would you like to add your perspective?
Yeah, no, I think that's absolutely. I think that's actually a very good summary. I think you can also note is that the idea of ledger technology and blockchain has been around for a long time, but this is what Bitcoin has been able to do is take it to the current world we live in, and also introduce the most important feature, which is the element of trust between two parties, so no one needs to stand in between your transaction.
Kunal?
Let me maybe take a minute or two on the history of Bitcoin. So for everyone's benefit, Bitcoin as a concept was invented in November 2008 when it first came to light as a white paper published by somebody till unknown to anyone with an alias of Satoshi Nakamoto. And if you remember, 15 September 2008, one of the historic moments of the world, Lehman Brothers filed for largest ever corporate bankruptcy. Since then, there were some smart ethical programmers unknown till date who came up with the idea, why do we need a centralized financial system? In the centralized financial system that we live around today, and we lived around in 2008, it didn't seem to work. With Lehman, there was a big credit crisis and follow on into the rest of the economy, and contagion was very visible to everyone on the street. People came up with the idea, why do we need anybody in the middle? Why can't we decentralize everything, get away from banks, get away from governments, get away from everyone? Somewhat become a currency, a decentralized, a global digital virtual currency like internet, which could work on internet and beyond. So that was the birth of Bitcoin, because the current financial system did not seem to work for a few people. They came up with this concept. Over time, the Bitcoin first white paper, which came out in November 2008, then people, open source community had to get together and put the technology behind, which is blockchain, which we may get to cover later or not. But just remember, why was it invented? It was invented because people didn't believe in the governments, people didn't believe in the financial systems, people did not believe in the centralized institutions. That was the whole idea. And these things, similar things had happened in the past. Wikipedia had come around, managed to keep the most decentralized content on the internet, where anyone could contribute, curate, and consume information. Linux had come around to beat Microsoft and become a more open source kind of a project. And many such projects had happened on internet before as well. So there were precedences, but now they gave money angle to the information management, and everything else that Sahni said, that Sandeep said holds. So since then, Bitcoin was invented. Over time, it was adopted. Primarily, it had grown from it had grown a lot in the years when the governments did not do well. So in 2016 was a classic year in which Bitcoin grew a lot, primarily because Brexit happened, Donald Trump happened, and demonetization in India happened. As people lose trust in their governments or the centralized systems, Bitcoin went up. Over time, it became very universal, used everywhere, accepted everywhere in many places. So frankly, that's one way to look at it. It's a parallel, non-government, non-centralized, not dependent on one person, one institution system. That's a financial system, peer-to-peer network in which you can transact with anyone. And it could be peer-to-peer. Means if I have to interact with you, I don't need to have a MasterCard in between, or a bank in between, a JP Morgan or an ICICI bank in between, or a currency which is issued by some central authority. It's a currency which is completely decentralized and driven by the community, for the community, and all the community can participate in it. So few more pointers around Bitcoin, if I may add. Yeah, go ahead.
So a decentralized currency based on a peer-to-peer technology to facilitate instant payments.
Correct.
Now, but when you talk of a currency, usually you are well aware of how a central bank typically goes out creating new currencies. Now, in case of these cryptocurrencies, how are they made or how are they generated in the first place? Can you touch up a little about that?
Sure, I can go about that. So firstly, they decided for any currency to be valued or anything in the world to be valued, it needs to be limited in supply. So Bitcoin, they decided early on, would not be more than 21 million ever. So they decided to keep the supply limited. With that, what it meant was that with a limited supply, its value would go up and down based on the supply and demand in the market and adoption and variety of other factors. So they kept the supply limited. But day one, when they said, let's start the Bitcoin. So day one, say first Bitcoin was issued by Satoshi Nakamoto to someone, right? The person behind, he gave one Bitcoin to someone or a few Bitcoins to someone. Since then, every new Bitcoin is only generated by a process called mining. So essentially what happens is, let's say if I give a Bitcoin to you, and let's say Ian gives a Bitcoin to Sandeep for whatever in return for any service or product or anything against it, all the transactions are validated by a decentralized community of miners. So they are essentially, because it's not a centralized system, there are a bunch of people around the world, bunch of servers, which are actually a lot more than one can imagine. Millions of servers around the world are constantly listening to all these transactions, validating them, hashing them, encrypting them, and coming up with a hash through which it becomes a secure ledger. And in the process, whoever gets it done, whoever comes up with the hash first, it's a probability driven cryptographic mathematical problem. Whichever server comes up with the hash first gets paid in Bitcoin. So essentially miners are the ones who are generating the Bitcoin, and the generation happens when people are transacting with Bitcoins. So frankly, today, I believe, Sandeep can correct me if I'm wrong, about 18 million Bitcoins are in circulation. There are 3 million yet left to be mined, give or take. But also you may ask, why will we ever run out of them? Not really, because every 2 years, the Bitcoin mining incentive is halved. The amount of Bitcoin generated is not one, it could go up to the 10th decimal. So it's always constantly reducing. So mathematically we'll never mine all 21 million Bitcoins ever. So the generation process is by computer servers owned by people who are running server farms for the purpose of mining and validating the transactions for rest of the world. This is how Bitcoin is generated. Yeah.
So some have compared it. Sorry, Sandeep, you want to add to that?
No, your question was that, the monetary policy is not controlled by a central authority. So why should we trust a monetary policy like that? I just wanted to make a point that even not talking about Bitcoin, historically before US dollar is a global currency, we were using the gold standard for hundreds and thousands of years. So actually the majority of human civilization, we've used money which is actually not controlled. The monetary policy is not really controlled by a central authority. In fact, the realization is increasing that is much better. When you have a centralized control of monetary policy, it actually doesn't work because it's impossible to control this complex mechanism. So I just wanted to say that.
So actually you take up a very interesting point. Some have compared Bitcoin to a digital version of the gold. I mean, the similarities are very, very close. Both of them are mined. One is physical mine taken from the ground. One is electronically mined by solving a problem. Both of them are outside the government control, none of the government. But the only difference is one has been around for 5,000 years, while one still has to make its space in the universe. So what is your take on the comparison between the two?
Very real comparison, I think. I think like gold acts as a hedge to inflation, hedge to recession, goes up when things go wrong in the economy, relatively speaking. So Bitcoin is also arguably very similar. gold, I would argue, and again, Sandeep, I would like to hear your point on this. I would argue that Bitcoin has more real use case than gold. The reason is the following. Gold is just a yellow rock at the end of the day, if you think about it. It's limited in supply, so we start valuing it. And then over the last 5,000 years, it's held its value across wars, across civilizations, across evolutions and everything. But I would argue that gold in reality, nobody needs to wear a gold in their body. It's just been marketed into our subconscious that, yeah, we need the gold jewelry, we need gold here, we need gold there. But reality is Bitcoin is a much more needed thing in today's world, because you do need to get away from the central government controlled currencies. You do need to have currency for internet. You do need a global digital virtual currency, which the world will never bring together ever. I would argue that actually Bitcoin has more real use case than actually gold itself, arguably. But Sandeep, I don't know if you have a view on this.
My view is that anything which is scarce and which can be used as money is extremely valuable. I'm a gold buff. Any true Bitcoiner realizes the value of gold as a monetary good, and most Bitcoiners are gold buffs as well, simply because they both serve a very critical function the world needs, which is a scarce commodity which can be used as money, and it's a very critical task in the way society functions. So gold plays that role fantastically, still does, and Bitcoin, of course, because it's digital and it can be moved around, it has other applications, but I would not take away this major function of this asset, which is store of value, which is investment, protecting yourself from inflation and protecting your purchasing power, which both of them do.
I would add on to those points as well. I think because of the store of value is really the key argument and the key way that we think of Bitcoin as, and leading to, because of that scarcity value. I would add to the bullet points of the argument just being divisibility. It's very hard to chop up a gold bar, but Bitcoin can go down to a 10th decimal point, as well as portability. It's tough to carry around a bunch of gold bars from one place to another, but you can store your private key code in your head and take it with you wherever you go. So scarcity value, limited supply, divisibility, portability, and I'll just touch on something that we talked about also is it's only been around 12 or 13 years now, while gold's been around for millennia. But trust is the key point there, and we think as more time goes on, it's only going to increase. The Bitcoin's trust will only increase from here.
So when we talk of Bitcoin, Bitcoin is only one of the various cryptocurrencies that are out there, right? So is there a way to really evaluate one vis-a-vis the other? How many of them are out there, and what is the real measure of judging one vis-a-vis the other? Sandeep?
My view is that cryptocurrency is the wrong word to describe Bitcoin. There is Bitcoin, and then there are cryptocurrencies. Calling Bitcoin a cryptocurrency is like calling the internet a network. The internet is by itself a separate thing. Just because it's a LAN or it's a network doesn't mean that a LAN and an internet are the same thing. The way, even when the internet got started, there was a fight between a lot of different protocols to become the standard which would drive the internet. And in fact, Microsoft, Oracle, they were all saying that they're going to launch their own, they used to call it the information superhighway, which would be far more secured. It would be, far more efficient than the internet. But finally, the decentralized open source internet won, and all of these private networks, work within a very limited range, like your LAN in your office. So for me, Bitcoin is that internet of money. A lot of other cryptocurrencies are experimentations, and it's fine, those experiments are happening, but I don't talk about them in the same breath. And that's the reason I put the word Bitcoin in my name as well.
Ian, what's your take on this?
No, I agree. Actually, Sandeep used the exact same phrase that I use sometimes, especially when I'm talking to people just getting interested in cryptocurrencies. It really is Bitcoin and everything else. The adoption, the winners, if we will, or will just be if those use cases of those individual cryptocurrencies get adopted by the greater financial system and the greater world. In terms of Bitcoin, there's many different ways that people take a stab at valuing them, and that being whether supply or demand side, stock to flow models, how much is produced, something called a whale index, a speculator index, which basically just means have people held Bitcoin for longer in terms of that, and in terms of the whale index, had people, the largest holders of Bitcoin, continue to hold Bitcoin. So in other words, has it been concentrated among the biggest holders or not? And then of course there's the supply function, which we already talked about, was there's only 21 million, there's only 3 million left. So is the demand for it there? How is the hash rate going? So there's a couple different metrics which people try, but this is all very new because, as we've said, there is no cash flow model, which makes it very difficult for the traditional finance world to kind of accept and continue to adopt. So it's been a slow process.
So we just come to that point that you touched. But Kunal, let's hear your perspective as well.
So I think Bitcoin is a real deal. I agree with the other panelists as well, Ian and Sandeep. I think, look, the whole idea is that we are trying to decentralize internet. We are trying to decentralize a payment network. We are trying to decentralize a cryptocurrency. The best thing Satoshi Nakamoto did for Bitcoin was never come forward. Nobody knows who Satoshi Nakamoto till date, and I wish we never find out. Okay, and it's not me, by the way, not avoiding any rumors here. But the point is that think about. Let me take an analogy. Let me try and take that. Think about Walmart. Walmart 20, 30 years ago was a big giant. They're still a big giant. But it was an offline, and they were not good to their merchants or sellers and everything, right? All Amazon did on top of Walmart was made it online, made it digital, but they did not decentralize it. Now the power is concentrated away from Walmart into Amazon, right? So it's not truly decentralized in a way. The merchant problems exist, many problems exist because of that. So same thing with any other cryptocurrency. The moment somebody heads a cryptocurrency, there is a CEO, it's not open source, the CEO decides everything. That's a problem because they will probably, there comes a central point of failure. It's not truly decentralized. Think about Wikipedia. Nobody here in the audience should know who is the Wikipedia CEO. Think about Linux. Nobody should know who runs Linux. It's truly open source community. Same is with Bitcoin. It's the open source community. It's the believers, some of us and many others who do this. But in case of any other cryptocurrency, the only people driving are the people owning most of that cryptocurrency or who've raised most of the money with that. So frankly, Bitcoin is a real deal. Everything else is an experiment. Some of them make sense, but 99% of them are not relevant. You can easily ignore, if not all 100%.
So, okay, Bitcoin versus other cryptocurrencies. Okay, Bitcoin wins hands down as per common views. What about the underlying technology itself? Is on the same thing? Would you say the same thing for the Bitcoin-based blockchain and the other Ethereum and other blockchains as well?
So I think all the blockchains are again trying to do the same thing. They are decentralized technologies. In blockchain, there is a consensus protocol that you can change from 51% to 26%, proof of stake, proof of this, proof of that. There are many things you can change to make it more efficient, faster, cheaper, better. All the versions work, frankly, but none of them have been scaled up in any other cryptocurrency adoption. Ethereum tried something which I love as an experiment, but I don't think it's proven its real value, where you can have some variable use case embedded as a program within the blockchain, where something will happen only if something else happens, if else kind of a broadly put statement. So Ethereum makes sense. It's interesting. Many other blockchains make sense. Blockchain is fine. It's, tons of blockchains are out there. IBM has invented their own. Microsoft has invented its own. Tons of other players have invented into consortia their own. But it's almost like, imagine humanity invented sports for the first time, but everyone is playing their own sport and there is no second player playing that sport. So there's a team for football, there's a team for cricket, there's a team for tennis, but there's no second player. So frankly, the only blockchain that has had adoption is the Bitcoin one and the Ethereum one. Many others have unfortunately not scaled as much, but they do serve a purpose. It's just a matter of agreeing on how you build the ledger, how you consolidate the ledger, how you transmit the information, etc. So all of them could be okay, but depends what you are using them for.
Interesting. Sorry.
Hi, Ashim. We have a lot of questions. I think it's very interesting. But before we move on, just a couple of very basic questions. What do you, when you say, Bitcoin or cryptocurrencies mined, what does that exactly mean, and who is mining it? Is there some regulation behind, who is allowed to mine or who can mine? And then, follow up to that, when you say there is a ledger maintained, how is, Bitcoin being used in illegal activities on the dark web? If there's a ledger maintained, why is it not traceable?
Okay. Shall I?
Kunal, you start.
Okay. Okay. So let me take the second question first. So firstly, all the Bitcoin transactions are anonymous. Okay. Anonymous meaning that if my name is Kunal, I have a Bitcoin, I send it to you, and you know me for some reason, you know me. But if we meet on internet, let's say on dark web or otherwise randomly on internet, and we don't disclose our identities to each other and we transact, I give you some Bitcoin in return for some product, service, or anything from you, you don't necessarily get to know my name if I don't give it to you. Okay. And you do if I disclose it to you. All the other people, so assume, so in this case, basically my name is, I'm just an alphanumeric character of 29 letters, ABCXYZ111. That is me. Okay. On Bitcoin, that is my Bitcoin address. That's all you get to know. So it's anonymous. Nobody knows who is this ABCXYZ. It's only me who knows, or if I tell you, then you know. The rest of the people who are validating our transaction never get to know that it's me. So this is why it's anonymous. It's like internet. Nobody knows, nobody needs to know. And this is how the internet and payment networks could operate if they are not highly regulated. So that's one, why people don't know it. Now, if people can do legal or illegal activities with any mode of currency, any mode of any asset itself. People have, like, if you take an Indian example, you have Benami properties used for illegal transactions. It's not that Hawala money doesn't happen with the central bank printed notes. So money can be used for anything, but it's just a means to an end. It's not that Bitcoin is developed for only illegal transactions. Okay. It's used for legal as well as illegal transactions, depends on intent of the people. So that's one on the anonymity and the dark website. Second question was, how do miners work? So basically assume we are how many people in the room? I think we are about 100 people, let's say. Assume I'm paying 1 Bitcoin to Ashim and you are the rest of the Bitcoin community. All of you can validate this transaction by saying A, that is me, gives money to B, that is Ashim. And all of you can check whether we had this money before giving it to each other. Yes. I gave it to him. Now he has it. I don't. Yes. You validate this transaction and you come up with something which is think of it as a random number, which is a hash, which is a cryptographically generated number. All of you try to do that. Whichever of you comes up with it first, and it's almost like playing bingo or tombola if you know those games. You say, I got it. You announce it to the rest of the group that yes, AB transaction, I got its hash. You announce it to the group, 51% people will validate that it's the right hash. The moment they say yes, 51% of them, the world is closed, AB hash is done, world moves to the new stage. Now, A gives money to C, B gives money to D, and it moves on, so on and so forth. It's a serialized ledger of blocks of transactions. Anybody who comes up with the hash gets a Bitcoin or gets a fraction of Bitcoin. This is how Bitcoin is mined. And it's typically not people, it's your servers. You can deploy tons of servers, tens, hundreds, thousands of server farms. When your server comes up, all your servers are designed to come up with this, solving this cryptographic problem of getting all the transaction, putting them in a block, coming up with the hash. And whoever keeps coming up with the hash keeps earning the Bitcoin. So this is essentially sort of like running your servers to generate Bitcoins. And there's a cost of running the server, there's electricity cost, cooling cost, the server cost, and the data center cost. Those costs, once you account for, and the amount of Bitcoin you can make, that is your profit and loss once you offset the cost versus the probability of generating the Bitcoins. So this is the mining process. I tried to explain it in 2 minutes. It can easily take 30 minutes. I hope it makes some sense, but for any details, we'll have to take it offline.
I want to just hone in on one point, just to piggyback on that, is just that's a key point of what keeps this decentralized. Everyone mining, the entire community, is verifying the transaction. They are proving that there is trust between party one and party two. So therefore, everyone takes part in it. There is no bank, there is no financial institution. And your reward for participating in that community is by mining and ultimately receiving the Bitcoin, which has value. So that is a key core component of this entire thing. I think you summed it up very well.
All right. Prashant, are there any
Yeah,
other questions? Yeah.
yeah, a couple more. So, how does and I think you briefly touched upon it, Ian, right now. How does one value Bitcoin? So one is, since there's no reference point, how can people trust the value it's traded at?
Yeah, I touched on it briefly because I think if we dive into each one of the metrics, it'll get more and more confusing. So we'll keep it top level again because there is no cash flow. It's very tough. But how much electricity it costs to mine is a value of the Bitcoin. So should it be going higher? How much is available that's traded in circulation in the market is out there as well. But really, I would go back to it just as because there is a cap supply, because there are a finite amount, and the value can be pertained for what it's worth versus other goods as well.
Got it.
We've got an interesting question. If the mining rate or the price of mining or cost of mining keeps on going up, there will come a point where it will no longer be profitable to mine new Bitcoins, right?
No, so that's a Moore's law. In 2 years' time, the cost of a server doing the same amount of cores and programming will go down. You know, the chips and the cores they keep adding to a becomes faster and cheaper and better, right? Every 2 years, you get outdated and you bring the new ones in. Cost of electricity may remain the same or not, depending on which kind of country you're in. But the cost of mining should go down because the number of transactions of Bitcoin are also meant to go up. Okay, so the today on average, from what I recall, it costs about $5,000 to $7,000 to mine a Bitcoin on average, and its value is around $12,000 today, give or take. So right now it's profitable, but there do come points when the cost of mining is around 4,000 and the Bitcoin was valued at 3,000, not too long ago, about a year ago or so. So it does go up and down. But I think once people have put in the infrastructure, they keep doing it, and beyond a point, they do no cyclical. It's just like any other business in the world as well. Sometimes you sell products for cheap and, to build the market or sustain in the market, but then eventually it comes back. So arguably, two things should happen. Number of Bitcoin transactions go up. Bitcoin's value goes up with it as more and more people start transacting peer to peer. And secondly, the cost of hardware goes down every year, every 2 years. So that's the reason why it doesn't actually go out of sync. It's very much in sync, very well thought through.
Actually, I have a slightly different view on mining. Mining actually follows the market price of Bitcoin, according to me. Just like gold mining, mining gold becomes more and more difficult as you kind of skim the top layer of the earth, as you can go deeper and deeper. As the gold's price keeps increasing, miners have more incentive to go deeper, and so they can spend more money. Similarly, Bitcoin mining, and that's the reason they call it mining, because the analogy is to gold mining. It is a competitive process. So if all the miners disappear, only one miner is there, he can mine it on a laptop. But if the Bitcoin price goes up, more miners enter the market, just like more gold miners will enter the market, which makes Bitcoin mining more difficult and makes it more expensive. So Bitcoin mining, and as Kunal said, it's always in sync with the market price. If the market price tomorrow crashes to 1,000, okay, all the miners who have the infrastructure might continue for some time, but eventually will stop. The competition will reduce and the Bitcoin mining costs will go down.
All right. So the next topic we wanted to touch upon was Bitcoin as an asset class, and does it make sense in an investor's portfolio? So we've already touched a little bit upon it, but let me put it this way. So when we talk about asset classes, there's a classical asset class framework that we look at. There's equities, there's commodities, there's currencies, there's fixed income instruments. Where, if in any of these buckets, would you classify it, or which one is it most closely related to? You've discussed a couple of analogies, but so how would you like to compare that? Ian, would you like to start off?
Sure. Yeah. I mean, in terms of the asset, I actually believe it's its own asset class in itself, and I believe it should be a piece of really everyone's portfolio to a certain extent. Now, there's a lot of different studies. There's a lot of different measures of how much of your portfolio it should be a part of. Studies show anywhere from 50 basis points to 5% of your portfolio. But before even going down that path, I think this is really a standalone asset class that should be measured in its own light.
I agree. We can argue whether Bitcoin should be 1% or 100% of a portfolio, but I think the time is you'd be absolutely on the wrong side of financial future or money's future if it would be 0%. That is absolutely sure.
So from a historical performance perspective, I don't know, I remember reading it somewhere that since inception, if you take it, this is clearly the best performing asset class across, I don't know, it's up like, I don't know, 2,500 or 3,000% up since inception. And inception is like 5-10 years back. So it's clearly had an exponential growth from pretty much 100 to 10,000 odd dollars today. So the $1 million question really is, where is it going?
Well, it's actually in your question when you said $1 million. I think it's the price is of course exponential, just like stocks of many tech companies, and so I mean, depends upon what period you kind of take. I have this interesting. I actually recently posted a part of an old video which I called Bitcoin boom cycles. Bitcoin, of course, goes through its cycles of ups and downs, but those ups and downs are absolutely higher with every 2 or 3 years. So there's a speculative high and there's a speculative bust, but still the trend is upwards. I think there are many models, and some people think that they've missed, the golden years of Bitcoin or the Bitcoin years of Bitcoin. They said the same things even 5 years back when it was $500, because they would compare $500 to say $10 of Bitcoin. I think for the next 10 years, Bitcoin is still where maybe Amazon or Google was in their first 10, 20 years. Still, it's just a $200 billion asset. Gold is a $10 trillion asset. Bitcoin's best years are still ahead. There are a couple of models, and I think one of my favorite model is, like Ian mentioned, there is a stock to flow model by Plan B. I've posted on, on my videos and articles. I cover it a lot. I talk about it a lot, which kind of says that Bitcoin goes through has been considered as different asset classes, and every time it jumps to the next more recognizable asset class, its market cap kind of exponentially takes a quantum leap. In those stages, it's the 7-8 stages on the way to gold. It's somewhere in the middle. So I think Bitcoin has a long way to go, and I have very bullish price predictions, but we will not do that on this, publicly like this.
Yeah, I'll actually piggyback. I'll put in 3 different bullet points as to why people are looking at this now. These are the 3 main reasons that I see. One, for Bitcoin specifically, inflation protection in a world where central banks are now printing money left, right, and center, and store of value, potential dollar not being the reserve currency of the world. Bitcoin is attracting a lot of attention. 2, the performance, the historical performance that you mentioned, specifically recent performance from this past March sell-off, how it's performed since then, has gotten a lot of institutional attention worldwide, the US and abroad by far. And also, if you, what I like to point out is a study that's shown by an asset manager polled their holdings and showed that of the millennial generation, our product, the Grayscale Bitcoin Trust, was actually held in their millennial portfolios more than Berkshire Hathaway. So I use that as sort of an antidote to say, as investors, you want to be investing in where the youngest generation is investing, because of course they will be investing for the longest time. So I think that is a strong an analogy or antidote you can use to the attraction of Bitcoin.
Absolutely. Even at Zepe, 18 to 35-year-olds were 50% of the market share.
No, that's great. Interesting.
Kunal, you would like to add something?
Yeah. So I think, look, Bitcoin value, I would not like to predict anything. I hope it goes up and down as per the market supply and demand and everything. There's one challenge with Bitcoin, though, that I want to point out at this stage. Obviously, everyone's holding Bitcoins, selling assets on top of Bitcoins, etc. That's good. But I wish to see more Bitcoin being used for the purpose it was invented, which was a decentralized payment mechanism. Unfortunately, that's not happening as much as we would have all liked. I don't think. So the use cases that, let's say, if I have to go and by the way, obviously it's not accepted in too many places or any place, frankly, as far as I can tell. But if you go to Singapore, you can get a coffee for Bitcoin. If you go to Canada, you can get a Tesla car for Bitcoin. In UK, you can buy houses for Bitcoin, etc. And it's accepted, and government also accepts it, and you can pay the taxes in in similar currencies. And Japan had completely legalized it and even waived off some taxes on Bitcoin versus the Japanese yen, because they also look at it as a positive future currency. I would like to see more adoption by people actually using it to pay someone for some products and services around the world, around their own neighborhoods, etc. That's something which has not grown as much as it should have, because that was a core reason why it wasn't. Everything else as a store of values, okay. If everyone believes it, it works, just like gold. But gold is equally, remember, widely and highly used for jewelry purposes and probably some other purposes. So I wish Bitcoin is more used for that payment purpose, micro payment purpose. And the real use case of Bitcoin is probably not necessarily for us. You and I have Paytm, probably we have credit cards, we have Google Pay, we have tons of PayPal, we can pay anyone, anywhere. But you know, the real use case of Bitcoin, frankly, in my mind, let's say an illegal immigrant from Mexico or India driving a cab in New York, Manhattan, he saves $100 a week, wants to send the $100 back to his home in Mexico or in India or some village somewhere. You know, today, and he's not, if it's illegal, he's not banked, he may not have a bank account. Today, if he goes to Western Union, it'll cost him $30 for the payment cost, minimum, which is the minimum of Western Union, I believe. And it'll take 3 days to make the payment. Whereas if we were able to do this on a Bitcoin, which many countries support, from US to Africa, from UK to Mexico, etc., in that case, the transaction would be done in few seconds, few minutes at the worst. And the cost will be, on $100, the cost would be like 1 cent or something. That's a real use case. Bitcoin can still help 5 billion unbanked people to get access to the financial system. And I wish and I hope that somehow comes together.
So that's an interesting point. The speculative end use of Bitcoin has significantly outnumbered the actual transactional value on the transactional end use. That's something that partly could also be because the speculative interest has been much more stronger. And the actual takeoff in terms of transaction is still something that has been a gray area as far as governments are concerned.
I'd like to respond to that. I don't think that speculative interest in an asset is wrong. Speculative interest actually provides a liquidity to a particular asset. That's the reason we speculate on stocks. It's the same thing. So I don't think it's inherently bad because it gives liquidity to the market. Also, I do not agree that Bitcoin is not being used on a transaction level. If you see historically, I mean, just maybe say 2 or 3 years back, I've opened the chart over here. You can go to blockchain.info to see the network activity of Bitcoin volume on the Bitcoin network. Of course, it's nothing compared to Visa, MasterCard, or payment networks. But just 2 3 years back, it was about $100-200 million per day. And today it is averaging between $1 to $2 billion a day. So it is increasing, with time. The second thing is to be used as payment. If you have 2 forms of money, if you have the US dollar or the rupee, and if you have Bitcoin, one which loses its purchasing power, becomes almost half every 4 or 5 years, one which increases exponentially every 3-4 years, which would you ideally like to use to buy something? What I would do is I would accumulate what we call as strong money, gold, Bitcoin, because that's increasing in value, convert it into what we call as short-term money or money which is inflationary. So right now, Bitcoin's store of value purpose will dominate for the foreseeable future because we use US dollars and we have these payment networks which are very easy and they lose value. So I would never buy anything with my Bitcoin because I use it as a store of value. The third thing is for merchant payments, which absolutely, those things should happen where you can pay merchants and stuff. Just like the internet was not okay to stream video and images in the beginning, it was started off as text. The Bitcoin network is still developing to be able to handle that kind of volume. So there's, which we call as layer technologies, protocols on top of the base protocol. So there's something called a Lightning Network, which has come out, which is increasing in its volume, which is meant for merchant payments. So I think in the evolution, all of these things will happen and Kunal's wish and dream will be fulfilled.
Should we take up questions related to this topic?
Yeah, there are a lot of questions. And the first one is quite interesting since all 3 of you are quite bullish on Bitcoins, which is, what are some of the key risks, when you talk about including Bitcoins as an asset class in your portfolio, what are some of the key risks there?
And I'll start. I mean, like let's be honest, everyone. Of course, Bitcoin could be zero. So your key risk is, of course, that this is still, while we believe it's or at least it sounds like my panelists agree, this is a maturing asset class and a maturing technology and a maturing form of payment. But it is still a speculative investment. Anything can happen, and it very well could be zero. So I think any investment in that, you have to know. You have to come to grips with as well. Now, I won't make any price predictions either, but there is a phrase that I like. I've certainly met people who have bought Bitcoin below 100 and have bought Bitcoin above 10,000. So they like to use the phrase, there's never a bad time and there's never a good time to buy Bitcoin. So I think it is about your own personal sizing of what is the right amount that you feel you should hold of a speculative but potentially high earning investment.
To me, the risk is really I've dealt with Bitcoin investors or Bitcoin speculators since years, and I believe that the biggest risk is people who get into Bitcoin without spending the time required to understand Bitcoin and without the knowledge of Bitcoin, which is actually true for any asset. When you you invest in any asset without knowledge, that asset is risky for you. And so my purpose and what I try to do is really educate people about Bitcoin, because your risk decreases as you educate yourself. And so I would encourage everyone to do that. This is something that deserves your attention for sure.
In my view, I think the points are well covered by Ian and Sandeep. You should try and learn it. Don't invest blindly because I made money. That's never a good thing. And, collective stupidity of humans have led to a lot of busts, a lot of booms and busts eventually. Everyone was buying credit products in 2006-07. Everyone was buying .com stocks in 98, 99. So don't be like that. Try to learn it, try to understand it, and then buy it if you believe in it. Worst case, be prepared to lose it. So it's a, relatively speaking, because it's a less mature asset class, it's a risky part of your portfolio. So invest the money and try to forget it, or try to keep it secure, of course. Don't lose it. By the way, many people lose their private keys or put it on a Bitcoin exchange, which is a scam, etc. So try and secure your key somehow, secure your asset somehow, or find an easier way to invest into getting into Bitcoin exposure. Other than that, I do think that in the next 5 to 10 years, there's a massive adoption coming as robots, AI, many other technologies start doing things on behalf of humans. I do believe this is the micropayment tool would work. A version of Bitcoin is likely to succeed and become the only major currency around the world. It's very possible, but only invest the amount you're willing to lose. Don't go in and expect that you will become a millionaire within a day or a week or a month or a year. It's gonna take a long time.
And that's a great segue into the next question, which, you keep reading about how, Bitcoin value went up by thousands of dollars in a day and you lose thousands of dollars in a day. How can an investor mitigate that sort of an underlying volatility?
I think, yeah. And Ian, you want to go?
You go ahead. Go ahead, Sandeep.
Yeah, the volatility is similar to volatility in any stock company which is new, which is maturing, which has not reached a maturity level. Bitcoin's volatility, there are a couple of charts out there. I think btcvol.info is one of them. If you see historically over a longer period of time, zoom out, the volatility is going down. But because Bitcoin is just a $200 billion market cap product, if there is money coming in or coming out, even it influences the price. So 20, 30, 5-10% volatility is common. In fact, just yesterday tweeted about the per day volatility and the percentage of the days when you kind of see that range. It's interesting. So you have to treat it like that. And I think you have to stop complaining about volatility about Bitcoin now compared to the volatility in the matured asset class. So that's a question which we have to stop getting now.
Yeah, I think you could bullet point to exactly what we all said: education and long-term view, and actually I'd add to that, and correct sizing for your own personal taste.
Absolutely.
So just to add to that, so I think one of the big validation of Bitcoin that we have also seen in the last few years is introduction of a futures contract on Bitcoin by CME. That's so classically, when you look at other asset classes, if you are holding in a bunch of equity portfolio, if you have an equity portfolio, one of the things that you would do to reduce the volatility is to hedge it out using hedging through a futures contract. So this is an instrument that it's of course one of the largest validations of Bitcoin as well, and also gives you a way to reduce the volatility if you're holding in intermediate period, if you believe that there is some kind of a, or if your view is that there could be a drawdown in the near future.
Oh, absolutely, Ashim. The entire traditional financial infrastructure, which is built around traditional asset classes, is being built around Bitcoin. So, for example, CME came with the futures. On the New York Stock Exchange, there's a Bitcoin index, price index, which publishes a daily, hourly, and I think a weekly rate. The Singapore SGX, the Singapore Stock Exchange, just announced that they will publish a Bitcoin rate. You can now get US dollar loans against Bitcoin as collateral, and you can earn interest on your Bitcoin deposits with companies. So all of this traditional financial infrastructure is being built, and if for you validation is this traditional financial infrastructure being built around an asset class, that is absolutely happening, and it's happening at an exponential pace. Last year, because the price movement was not there, so the community could go and work and build these great products.
So I was actually gonna kind of piggyback on that to use it as a segue to your kind of third main topic here. It was just how do you get invested with Bitcoin? Is it okay to kind of use the question from here? There's really three main ways. One is holding the physical coins, which you need to get a crypto wallet and then acquire the coins via an exchange or from a transaction with a peer. The other way is the futures market, which we just had a question about, and the third way is through different funds, like my company's products, which will give you access to the coins through any number of different ways. Now, I just will say one thing that she mentioned at the beginning of our call: the products that my company offers are not ETFs; they are actually trusts. The SEC has not approved ETFs as of yet, so I just wanted to clarify that here. But there are many. There are many products that can give you access, but those really are the three ways: the individual coins through a wallet, which you then acquire through an exchange, the futures market, or through a fund that can give you access to the coins.
So while we are on this topic, let me take a jab at touching upon, and this has been a popular question throughout, Bitcoin from an Indian legal perspective, and the regulatory hurdles and the challenges that we have faced. And I think, Sandeep, you have been right at the forefront of all the liaising with the regulator, liaising with RBI, with everyone else. So let's hear from you. What are the issues that have been there in the whole regulatory landscape over the last few years, and how things might have or could change going forward?
Sure. The summaries I don't know. So I'll just give you the end statement first. But yeah, I was chairing the industry association, and I thought that I would be spending a lot more time in maybe Bangalore or a tech place, and I ended up spending a lot more time in Delhi with the Ministry of Finance. So we dealt for the case in the Supreme Court against the RBI. Definitely, that was not something that was in my bucket list of things to do. We won the case in April of this year, and that's the reason all the cryptocurrency exchanges again have got their bank accounts and stuff. So basically, as on today, Bitcoin is not illegal in India, which is now very funny because the media reported Bitcoin has become legal in India. Actually, it's not. It's just that the RBI circular was kind of, the Supreme Court ruled that the RBI circular is not legal. So Bitcoin status remains the same. So that's interesting. You do hear repeatedly in the media that the government is coming out with some law and stuff like that. And when we go deep as a community into those news articles, they look a lot more like clickbait, some junior government article just saying something which gets over exaggerated. So I as of today, Bitcoin is legal, and then of course many people are still afraid to invest in Bitcoin. To them, I want to tell them that it's a asymmetrical investment. It's not like a 10%, 20% that you put a small amount. The asymmetrical rewards, according to at least me, outweigh the potential risks, regulatory or price or whatever, for a small percentage of your portfolio. So I still think that you should look at it seriously. Also, with the institutional recognition that Bitcoin is getting, and it's been an exponential increase this year, I think it becomes more and more difficult for governments like capital control governments like China, India, to kind of take a view against Bitcoin. Not that it cannot happen, it just definitely becomes a lot more difficult.
Let me add a couple of points to this, Sandeep. So firstly, there's a funny thing. You would have thought how hard it is to ban a virtual currency or a cryptocurrency or a Bitcoin in India. How hard it is for the government. I'll tell you the loopholes. Like Sandeep, I also spent some time with the Indian Finance Ministry on actually consulting and figuring these things out. What I learned was, and these are things in public domain anyways, firstly, to ban a cryptocurrency or to ban Bitcoin, the effort required means that first they have to come up with a legislation. To come up with a legislation, they need to recognize cryptocurrency in the Indian constitution first. And that's a major change. For them to say that virtual or cryptocurrencies are banned, they just can't do it with a rule or with a legislation. They need to first recognize it in a constitution, apparently. They can do it. So it's a massive process. So hence what RBI did a couple of years ago was, like Sandeep was pointing out, they just said to all their authorized dealers that you cannot deal with any entity who is dealing with Bitcoin. So sort of they cut off the Bitcoin entry point for everyone. And they fought the case, eventually they won. So now Supreme Court has said you can't do this, do it properly, or otherwise it's legal until, or it's not illegal. It was never illegal, like he's saying, but allow it to. So RBI ruling was overruled, and then they said, okay, they'll come back with something. In between, COVID happened, and now the priorities, I'm sure, for everyone have shifted. But just so you understand that banning it is a bigger challenge for the government to put it in place. Otherwise, if it were overnight, they could have done it. Changing the constitution and then implementing the legislation is a massive effort. They just didn't want it. And the reason why governments don't like Bitcoin is because they lose control. The moment, if we are all, some of us are in India, many of us are in India. In India, the government holds the power of taxation, holds the power of currency. They can date it. They can do many things with it. They can print more notes. They can cancel notes like they're done in the recent past. All these things can happen. But with Bitcoin, they can't do any of that. That's the reason why emerging countries like India, China, Russia not allow this or encourage it. Russia does now nowadays, but India, China are relatively speaking against it. And the governments lose control, and nobody wants to lose control. That's the reason behind.
I just want to add, sorry, one more thing, that if Modi can ban the Indian rupee, then definitely he can ban Bitcoin. Sorry, that's just a joke. I used to answer that when people used to ask me whether the government can ban Bitcoin.
So just picking up from the 3-point framework that Ian had mentioned, one is you can buy the Bitcoins directly or physical currency directly and putting them into a secure wallet. Second is exposing using futures or other derivative contracts. And third is investing via a diversified portfolio, either through a trust or any other fund structure. So the first one is what we are discussing as of today, how we stand, is still not completely kosher in terms of the legal perspective. What about the second and third? So like for Indian investors today, there's of course the option of Indians being allowed to send money outside of India through the liberalized remittance scheme, through which they can effectively send $200,000 per year. And with that, they're allowed to invest into any other global financial instrument. So that could be, is that a legitimate way? Is that something that you have seen come across any investors doing that?
Ian, you want to talk about the second point?
I'm sorry, that question was for me. I'm going to be a little out of my element here in terms of Indian regulation, so I'm going to have to take a pass on that question. But what I can do is come back to you and tell you a little bit more detail about how our products work. So if that's okay.
I can respond to that, Ashim. According to me, the second point is really not available to Indian investors. It's just very difficult. Of course, it's a possibility, but really there are the first and the third option, which Ian mentioned, which is buying in an exchange and investing in through structures, funds and stuff like that. The first option, all the cryptocurrency exchanges in India, the one which I founded and 2-3 really popular ones as well, they really are legal entities. They operate bank accounts and they have really decent volumes like any other big fintech company. So my father's a chartered accountant. I have Bitcoin holdings in my Indian entity. I file taxes. It's there in my books. I don't. I mean, if you want a law that it says it's legal, that's not there. But as an asset, I don't think really there is any problem. I've been holding Bitcoin in my Indian entities on my personal name since 5 years now. The under LRS, yes, of course, I think you can do that. I think there are, strictly speaking, under LRS, I think there are some restrictions that you cannot invest in financial products or money products on money. But then Bitcoin is not defined by RBI as money. In fact, I have a one of those RTI replies from RBI that Bitcoin is not currency, which then means that you can use the NRS. So yeah, nothing black or white, but in definitely great shades of gray, which you can go ahead and invest.
Interesting.
Here, I'll mention again, so with a complete, different page, different chapter in terms of Indian investors, but just to give you guys a little information on how our products work. What we really have aimed to do was to give investors access to cryptocurrencies through a investment vehicle, which is most likely more familiar to them. So you don't have to deal with the buying, storing, and safeguarding of the coins yourself. So we have a family of 10 products. 9 give you access to individual cryptocurrency. 1 gives you access to a basket of cryptocurrencies. Now, 6 of these products are currently publicly quoted. So I'll just use the example of the Bitcoin product, since most of the conversation has been centered around Bitcoin. Anyone can go into their brokerage account, if they're allowed, or anyone who has access to it through our brokerage account, and pull up our largest ticker which trades under GBTC on the OTCQX exchange, and go in and purchase $1,000 worth of Bitcoin. And this trust is made up of solely of Bitcoin. It is a long-only passive exposure. And this product has grown in popularity to really the world's largest, non-direct access to Bitcoin. I believe it's now just around 5 billion in AUM. Now, what I always tell people is, though, while this gives you access to Bitcoin, it is a publicly traded security and is subject to market prices. So currently, because of the popularity of this product, it trades at a premium to NAV, or in other words, a premium to where Bitcoin is trading. So what I always tell people, just make sure you completely understand what you're buying. How we grow this product is, if you are an accredited investor, you can participate in our daily subscription process by coming to us directly if you meet the US accredited investor standards. And that is how we grow this product, and how it increases the float, if you will, of the outstanding shares. So it trades very much like a closed-end fund. And also, just to the point of one other thing that the panelists mentioned, in terms of moving toward more adoption of cryptocurrencies, this product was given an SEC designation of an SEC reporting company just this calendar year. So that means that we have to report the same way that any SEC reporting company does: 10Ks, 8Qs, 8Ks. And it reduced our seasoning period for our daily subscription from 12 months to 6 months. So again, I just mentioned that point really to just show this is moving slowly but surely to greater adoption. But again, the SEC has not approved any ETFs yet. So.
Interesting. So yeah, I think increasingly as the asset class becomes more and more mainstream, and we start seeing a wider and wider adoption among the institutional audience as well as the retail investment audience, I think the suite of opportunities and the potential ways to invest in the asset class should also increase. We've already seen mainstreaming through derivative contracts. We've already seen coming up of investment vehicles around it. I think increasingly this is a trend that we should continue to see further and further going forward. So on one side, what I guess the panel is saying that definitely it's an asset class worth considering, understanding more about, think of carving out a space for it in your investment portfolio. On the other side, there are widening channels of getting access to this asset class through multiple opportunities. So yeah, and thirdly, on the view itself, I guess all the 3 panelists are strongly bullish. So those are 3 things you need to make a decision. Should we throw the panel open to questions from the audience?
Yes, we have quite a few questions. Just to I don't think we'd have time to go through all of them, but just a couple of follow-up questions on the trading for Indian investors. One, Sahni, I think you mentioned that one can buy bitcoins through exchanges. Um, a follow-up question is, where exactly is this Bitcoin kept? Is it like a demat account, or how does it actually work from a practical perspective? And then, what happens if the exchange shuts down for whatever reason?
Yeah, that's a very good question.
Yeah.
Sandeep.
So typically when you buy Bitcoin from an exchange, the analogy could be that you're trying to buy gold from a jewelry shop. You have multiple options. You can keep the gold with the shop and they can give you a receipt, which is typically what most people do, which is the worst thing to do, that you buy the Bitcoin from the exchange and then keep the Bitcoin with the exchange itself, the exchange wallet. You do not actually take delivery of the Bitcoin to your own wallet or to your own vault in the case of gold. And that's the reason I saw a couple of questions that when the exchange gets hacked, and an exchange is typically a honeybee for hackers to attack simply because there are lots of users, and exchange will find it very difficult to identify a hacking attempt from a regular user activity. You should use exchanges just as a conduit to buy and sell Bitcoin, go in and out, and not really to store your assets with the exchange. And then you have two options, of course. One is that you can take delivery and keep the Bitcoins with yourself. And there are many ways. There are hardware wallets like this. I make videos on this because in the Bitcoin community, we say something like not your keys, which is, not your Bitcoin. That's one way, especially if you're, at least a little tech literate. You don't need to be tech savvy. These are really some great devices out there. The user interface is really easy. I make videos on them, so please check them out. The other option is, if you're a family office, you're an institutional investor, then of course products like Grayscale, there is Fidelity is launching its own Bitcoin fund. These are exactly to target this segment of users where they do not want to deal with anything, just want to put the money in, and then a regulated entity, institutional entity takes care of all the storage and all the other headaches. So you have these options. Don't choose the first one. Keep the Bitcoins with yourself or invest through a product like Grayscale.
Just a quick follow-up. What's the tax impact of this? You mentioned you've invested in India. What is the tax impact?
I pay short-term and long-term capital gain tax.
Okay. Yeah. Is there any minimum investment size if one wants to buy Bitcoins?
No, typically it depends upon the entity. So typically Indian exchanges would allow you to buy even as less as 1,000 rupees. Of course, a fund like Grayscale would have its own minimum amount, but no, technically there is no minimum. Ian, you can mention the minimums.
Yeah, no, that's right. For accredited investors, we have kind of higher minimum thresholds, but to purchase it in the public quotation, it's very small. I'm actually forgetting if it's $100 or $1,000, but.
What are the minimums for your products, Ian?
Well, for accredited investors, for our Bitcoin and for our basket product, again, this is to participate in the daily subscription. It's $50,000. For our other ones, it's $25,000. But that's the daily subscription process to purchase it on a public quotation through a brokerage account that allows you to trade it. I believe the minimum is, again, $100 or $1,000. I'm not sure.
Got it. And then lastly, and I think we've definitely run out of time, are there any derivatives like futures or options traded on cryptocurrencies?
Yeah, there are derivatives. I doubt in the Indian entities provide these products, but there are a lot of exchanges like Binance, and a couple of exchanges specialize in derivative products. And then you have derivative products on the CME, the Chicago Mercantile Exchange, which is one of the largest exchanges in the US. They are there, but I think in your journey in Bitcoin, they should be a little later in your life cycle.
Well put.
Ashim, let me add another point to one of the questions which was raised earlier, which is likely to be a very standard question. So Sandeep answered this detail, but I'll just add. So essentially what it means is that if you go to, let's say, open an account and buy Bitcoin from an Indian crypto exchange, for example, or any other crypto exchange, when you open the account, there's a KYC process. So after that, you get access to and your Bitcoin or any other crypto you buy stays in with the exchange's wallet. But in order to take it out, essentially, you go to blockchain.com. That is one of the decentralized blockchain Bitcoin wallets, or any other decentralized wallet. It will give you an app on your phone, and it will have an address. So you'll get an address, like I was saying, an alphanumeric address of 29 or 32 digits. And then in that address, you can transfer your Bitcoin from the crypto exchange. And when you do that, the only other secure thing to do, if you can do it on a ledger, on a nano device like Sandeep was showing, or you can put it on your phone, that's fine. But it's private key. Try to not, so there's a private key associated with every address. That is your holy grail. Keep it very secure with you. Write it on a paper offline somewhere if you want to keep it secure, because if it's on your phone can also eventually, in the worst case, get hacked. So there's some challenges. I'm just trying to say which are the next steps you will need to consider. But there are tons of videos and blogs out there. They'll tell you how to put it in the most secure way. And Sandeep has put out one of the videos in the private chat as well, in the public chat as well. So just understand how taking the gold home or taking the Bitcoin to your wallet process works. I just wanted to add a couple of lines on that. I hope it makes sense.
Yeah.
Well, one of the earlier questions was, when we're talking about Bitcoin and in Bitcoin 101, do you think Bitcoins or any cryptocurrencies can sustain only on trading volumes? Let's say, I think Kunal, you mentioned early on that, there needs to be a lot more adoption in terms of its end use. Let's assume if one were to assume it isn't or wouldn't be used for transacting at all, do you think that, just as an asset class or a currency, it would still sustain based on trading volumes?
So I believe there are 3 use cases of Bitcoin. All of them are growing exponentially. The first one is store of value, again, which is a fancy word for investment, simply because it's a scarce asset and is definitely usable, very easy to store, secure, verify. If you get Bitcoin, you do not have to verify it is Bitcoin. It cannot be duplicated or forged. So there are some fantastic properties for Bitcoin to be used as store of value. Similar properties to gold, but much better. So for me, that's a massive use case. One. The second is, which Kunal kind of mentioned, and there are many people in the community who want it to be used as a payment network, as a transaction network, and that's also increasingly being used. I do pay for some services which I want anonymity. For example, I pay for my VPN using Bitcoin so that I don't have to give all my details. That entire infrastructure is being created, that it is happening. You see anecdotal use of Bitcoin being used as a payment network, but more and more. Just yesterday, I saw some article on Bitcoin being used as Africa. It is being used in remittance. I personally have used it many more times over the last year than maybe the couple of years before. So that for sure is increasing as well. And third is that we are seeing Bitcoins used, again, anecdotal so far, but to kind of store information which you would want to be recorded forever. So for example, maybe you want to take a document or a certificate, and you do not want anybody to mess with it, so you kind of take a hash, like the way Kunal was explaining, and so the trusted ledger part. All of these 3 things, it's like the internet, first email, text, but then as the capacity, as the infrastructure keeps getting built up, all of those visionary use cases do happen over a period of time, and they are all increasing. If you zoom out, they are all exponential increases in all of these 3 cases. Some at a lower base, some at a higher base. The speculative interest will always dominate, will always overshadow, just like with currencies. I mean, 90-95% of currency volumes is speculative, but according to me, that's not a bad thing. That gives liquidity.
Yeah, that's true.
One last question. Do we see, and this could be in India or globally, do we see some sort of a regulatory framework coming into picture? And if so, how they would manage risks? And more importantly, do you think that impacts the overall future of cryptocurrencies from a scalability perspective?
According to me, Bitcoin is one of those technology where regulation will always follow the innovation, just like maybe Uber or Airbnb, where regulators had no option but to keep accepting what is already happening. Right now, I mean, I know there is a travel policy, one of those FACTA, the international body which kind of advises every government to put rules on financial transactions, has just come out with an advisory called travel policy, in which it mandates all crypto businesses to know for every transaction the recipient and the sender, just like for traditional transactions. They have absolutely no idea about the technological development that's happening within cryptocurrencies, which, if you think that right now Bitcoin is pseudonymous, what's going to happen in the future? So I think regulation will just keep playing catch up. Bitcoin will not follow regulation. Regulation will follow. It's just unfortunately one of those technologies which is more bottoms up rather than top down. That's my view. It just cannot be stopped, I think. And then there is this geographic, what you call arbitrage, Right now, US is scared that China is developing its own digital currency. So there are these interesting geographical arbitrage due to which countries will be afraid to ban this innovation from their own boundaries. That also gives such decentralized technologies to thrive during these kind of times, and then they become widely adopted, and then it's too late. That's my opinion.
Yeah. I can add to that. So in my view, firstly, there will be no global regulation on Bitcoin ever. Bringing different countries together is like herding cats. It doesn't happen. They just never agree, and everyone has different agendas. It's just bureaucratically impossible to happen, right? Every country will be on their own. Some countries will encourage it, some will discourage it. But then nevertheless, it's one of those things where, worst case, we just said, worst come worst, Bitcoin goes to zero, but it's an idea which has come out. Now, some version or future version of Bitcoin is likely to be everywhere. And in the next 5 to 10 years, I do believe Bitcoin will grow. Bitcoin or a version of Bitcoin will grow tremendously, and regulators will never come together globally or even in a region to agree on it. Even if you look at Europe, for example, European Union is very careful, but some of their countries like Malta and Estonia are going the other way. They are just encouraging complete Bitcoin adoption and widespread and Bitcoin going mainstream, whereas rest of European Union is not in favor, so to say. So frankly, there is no easy way of people understanding it, regulating. And before regulating it, the biggest thing for regulators is to understand it. I don't think many of them have spent enough time trying to understand it from a perspective, where it's developed, what's the history, why it matters, where it could go in the future. These things don't matter to them, or they are not able to comprehend it well enough. So I don't think the regulations would actually lead anything here or there. Irrespective of that, given the decentralized nature, if China say ban the Bitcoin mining tomorrow, it's still happening in 200 other countries of the world. It will keep popping up. It's something that can't go away. It will happen, and regulators will just have to play catch up or just deal with it or get used to it over time. But they will not necessarily do the smartest things, I think.
Any asset that is global in nature and trades 24 hours a day, 7 days a week, makes it very, very challenging for regulators. So I think that what I hope is that over time, as the asset class continues to mature and gets greater adoption, that regulations will follow suit.
Yeah. So as they say, the genie is out of the bottle, and it'll be very difficult to put it back in. All right. Well, that was a very informative discussion. I hope our audience enjoyed it, and you'll go back having learned something new about this exciting space. I can speak for myself. You can visit our website, www.all-alpha.com, to view the recording of this webinar, as well as get the contact details. And the panelists have also shared the details on the chat itself. So thank you all very much for joining us today. Thanks a lot, Kunal, Ian, Sandeep. It's been a pleasure listening from you and getting your perspectives. And look forward.